And welcome back, everyone. This is a brief update on news from the oil market. In the previous days, Saudi Arabia announced that oil pumping stations were attacked 2 days after 2 oil tankers were sabotaged near the UEA. Many believe this was a minor attack placed from Iranian forces, displaying their frustration on the measures the US has taken against their country. Even though no significant reaction was observed on oil prices on the news, the matter has the potential of creating a geopolitical storm, especially if the US intervenes militarily. Moving to OPEC, with its oil cartel officials making some comments on its future expectations from the oil market as per demand and supply. The group affirmed that demand for its oil would be higher than expected this year due to supply decline from countries including the US kicking in. In our opinion, a lot of pressure is now placed on the OPEC Plus group, which meets in June, on whether it will remain in its current course of cutting down on barrels or move into producing more of the commodity. OPEC, Russia, and other non-member producers have already been reducing output by 1.2 million barrels per day since January 2019 for 6 months. Prices have been somewhat stable throughout the past months, yet breaking below significant price levels could lead to the oil industry back to square one, where price levels were very low. On this idea, we place some doubt whether OPEC Plus is ready to increase production and change course. We believe for the time being, they are monitoring if supply is really necessary rather than if to increase or not. OPEC officials previously stated that this will be the criteria they will use in order to increase production. For the time being, OPEC achieved 150% compliance in April, according to Reuters calculation, compared to 155% initially reported in March, while its April output decreased by 3,000 barrels per day, month on month, to a total of 30,031 million barrels per day. Other information could be considered contradicting, but it's worth mentioning. According to IEA, the International Energy Agency, global demand may not be dependent on OPEC to cover for any losses created. They claim that US output will manage to balance falling exports from Iran and Venezuela. The IEA said reduced rig counts and maintenance in the Gulf of Mexico had affected US output in the first half of the year, yet the increase in drilling permits and advanced extraction methods, which have been updated, would lift output shortly. For more in-depth investigation, please refer to our written report, which also includes technical analysis. For more information and trading ideas, you can visit our webpage, follow us on Twitter, like us on Facebook, or subscribe to our YouTube channel. This is Angelos Zitis from IronFX, wishing you solid trading.